it's actually a really exciting time to be investing in startups because now if you have the idea, if you have the creativity, you can get to value very, very quickly. And we're seeing some really exciting solutions across insurance, wealth management, and enterprise operations. And yeah, there's certainly a lot going on though. The list of companies to follow up on, the list of areas to look at, the list of model advancements, it grows faster than I think our team can keep up with at times. So it's quite busy right now, but it's fun.
AI and computers just becoming more and more democratized, which I think is just empowering more and more individuals to build tools and solutions for their specific area. I think for us, it's the swivel chair experience for financial advisors is very pertinent for us when we're thinking about solutions. And I think right now there's a plethora of different solutions in their tech stack, and it actually just reduces time and inefficiency and creates inefficiencies and gaps. On that hand, we're thinking about ways to centralize their workflows.
Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Hey, welcome back to the show. I'm your host, Ankur Patel, and today I have 2 venture investors at Allianz Life, Colin and Taylor. Welcome to the show.
Thanks,
Thanks,
Ankur. Nice
Ankur.
to be
Thanks
here.
for having us.
For the sake of our audience, we'd love a quick snapshot of each of your backgrounds. Taylor, why don't you give us a sense of what your background was, and then what do you do today?
Yeah, great, of course. So I graduated from college, UCLA, in 2023. I actually studied biology, environmental affairs, and public affairs, but was really curious about sustainable investing and finance and leveraging finance to foster sustainable change. And that kind of came about through an internship experience at a startup, which really exposed me to entrepreneurship as well and got me excited about founders and this ecosystem. And so when I thought about interns and enterprises to work at, I sought out Allianz because we're based in Munich, and the commitment to sustainability felt very genuine. And I also saw a lot of growth opportunity in our venture team. And so joined the team last year, and it's been a really great educational experience and just expanded my network. It's been wonderful. So yeah, working as an investor and also supporting communications and reporting on the team.
Amazing. And Colin?
Awesome. Yeah, for me, it's been a bit of a winding, but I would say fairly intentional journey. In undergraduate at the University of Southern California, I studied business, entrepreneurship, and computer programming, and actually did a specialization in mobile app development and was really curious about entrepreneurship, technology, and the startup world as well. But I started my career in investment management and spent 3 years as a derivatives trader, which gave me a big appreciation, I think, for data modeling and even some pattern recognition, which I think I get to apply in my current role. But ultimately, after a few years, moved over to Allianz's corporate venture capital fund, where I am today in an investor role, working with Taylor and Chad and Ron from our team. And I've been doing this for about 3 years. So really kind of combining my interests across the intersection of finance, technology, and entrepreneurship, and having a lot of fun with it.
For a lot of outsiders, venture capital seems like it's a monolith. It looks like it's one and the same, but there's so much nuance. You have specialist funds that focus in particular verticals or particular stages like pre-seed, seed, or A. Then you have the multi-stage funds that invest across the entire life cycle, potentially even in the public markets. And then there's, of course, what you do, which is corporate venture capital tied to a big strategic. What makes CVC different from traditional, maybe more financial oriented venture capital?
Yeah, I can take a stab at that one first. I think, there. Maybe I'll start with what's shared and what's in common first. The underlying purpose of venture capital and venture capital investors, whether corporate or the traditional VC model, is really to support founders and help founders build enduring companies. And if you can do that and you can, whether it's through providing capital, providing operational support, making connections, in our case helping with even sometimes strategic business relationships, if you can support those founders on their journey to building a lasting company, all the rest will follow in terms of investment return performance, and in our case the strategic benefits, expanding your network, the brand of the VC fund. So I think that is what I think is generally the same. What is different on the corporate side is that we're doing it from the lens of a large institution, and in our case, an insurance company. And so we're investing in companies specifically that we think can add value for Allianz. And that looks different in every startup, and it takes on a lot of different shapes and forms. But really, in addition to supporting founders building lasting companies, we're wanting to learn more within the walls of Allianz, push the organization forward, deliver new capabilities or potentially even new products and new markets as well. And so that's the fundamental difference. And some of our activities, that are different stem from that. But really, it comes down to supporting founders, building lasting businesses, and driving value for our corporate parent.
And Taylor, when you think about these investment opportunities, obviously, if you get startups that you bring into the portfolio that could be hugely beneficial to the parent company at large, Allianz, the ROI could be massive from injection of technology, perhaps even multiples of what the financial returns could be, right? And so how do you think about balancing that, the impact that the new startup could have to the parent company and the business at large versus purely from a financial lens?
Yeah, that's a great question, and that's something we're always considering. And I think, it also depends on the current priorities of our business as well, and what the goals are for the organization, and that dictate where we're sourcing and where we're prioritizing new investments. But I think, as Colin articulated already, we're a corporate venture arm that's financially motivated, but with a strategic lens. So, we always are thinking about the potential value add and tracking those engagements and the innovation that we can bring to the organization. But I think it really is case by case. And I think for all partnerships that we engage in, we try not to impart a very rigid metric structure, right? Because each partnership is going to look different and bring different value to the table, which is going to change with time based on, market opportunities and also where the business is. So it's something we're tracking, but it really varies case by case.
And as you look at which companies to invest in, I know there's some approaches that you take directly sourcing opportunities yourself, but you also have this approach of investing in other funds and getting deal flow and investments that way. How do you think about the two approaches, direct versus basically working through partners of yours?
I guess in one way, it's kind of how our program got started, actually. So when Allianz Life Ventures got started, it started with several fund investments, and it was a way to get exposure, get deal flow, build the network and the connections. And I think largely we've kind of carried that philosophy with us. It's a relatively small portion of what we do in total. The majority of our capital is going towards direct investing into startups, but we're a relatively lean and mean team. There's just the four of us. So this is half of the Allianz Life Ventures team on this call right now. So having, a portfolio of other fund managers helps kind of multiply what we can do in terms of accessing startups and connecting to other investors and even just learning and identifying new trends. And it also provides a level of diversification across our whole investment portfolio as well.
And then when you think about the investment follow through, so post investment, how do you think about making those startups successful, given that one of the big buyers and users of the technology typically could be Allianz Life as a whole, right? And not to mention Allianz, like based in Germany, like at a global level. So what could you do? What do you do to provide support to your portfolio beyond just the initial investment?
That's a great question, and I think one effort that began last year to support these companies is our Ventures Advisory Board, which includes 7 senior leaders across the business that we meet with on a regular basis and have really developed a strong rapport with. And they can really act as champions to help, bring a company that's in our portfolio to their area of the business to help streamline a pilot and POC. But I'd really emphasize the point that the partnership begins even before the investment is made. We bring in the business as soon as there's interest to get their perspectives on the company and make sure that, when we do this investment, that it's really reciprocal, and us as Allianz Life Ventures can really help accelerate their growth and bring something to the table as well. The Ventures Advisory Board is one way that we help facilitate. We also, have ongoing conversations with the business and are always looking on how we can connect them with Allianz Life. But as you pointed out, Allianz is a global company, so there's been multiple cases where we've connected a founder with other operating entities to really accelerate their growth, especially if Allianz Life might not be the right partner, but there's another operating entity in our network. I would say too, also, we do a lot of learning and development and engagement opportunities in the Twin Cities and also internally. So we're always looking to advertise, subsequent raises of our companies or partnerships. So always trying to spread the word internally, locally, and then to our network as well.
Yeah, and that connection throughout the Allianz network, both within the walls of Allianz Life, but also Allianz globally and to other operating entities that Taylor mentioned. It's really important for us because on one hand, it's one of our advantages when we're sourcing and evaluating businesses. We can go directly to potential customers and get their, firsthand thoughts on a new business and technology. But then after investment too, when we have those relationships and connectivity within the Allianz group, we have a place and a person and a champion in many cases to go introduce our companies to, which is very helpful.
As a startup founder, having seen a couple of ventures, there's always this maybe apprehension or fear that a CVC program, even if they have the best intentions day one, they lose the buy-in from leadership, right? So then the CVC program ends up folding, and then it's like in some ways like a temporary experiment. What have you seen, given basically the broader exposure you have to other CVC programs as well? How do you run a CVC program so it has very long shelf life that a more traditional VC would, and in a way where leadership doesn't lose the initial buy-in and mandate that they provided?
Yeah, I think it's a constant game of educating or constant process of educating all the stakeholders that are involved. And I think you have to everyone has to be well aware that venture capital is a long term game, right? Most startup investments I think I saw the statistics, startup investments in the US last longer than the average marriage duration in the US. So these are long term commitments. And I think as long as everyone from a senior leadership perspective is kind of bought in that this is, we have to stick this out. This has to be a long-term investment and a long-term investment, both from capital, but also the time and the resources allocated to it. And it requires patience as well. I think that's really important. And I also would say we're lucky in that within the insurance world, I mean, insurance companies have large balance sheets. They have to be diversified from a capital perspective. They're often especially in the case of life insurers, they're taking a very long-term perspective naturally by the nature of their investment portfolio. And so if you look at the insurance CVC world, many of the firms have corporate venture funds and many of them are lasting and some of them are even growing quite a bit. So I will say we're lucky in that regard.
Yeah, I think Taylor and you, Colin, mentioned this earlier, which is it's the form of discovery of new technology, new vendors, and business insights, and that's just as valuable as the financial investment that you may or may not make, right? And we see this all the time. CVCs come to us to go and understand the technology, to get inspired, to get educated, and there might be an investment possibility down the line, but that's not the only lens that CVCs look at startups. And so I think when you have multiple dimensions, it adds a little bit more depth, and then it's easier to trace the value, right? Versus like purely just a small number on a very large balance sheet.
Yeah, absolutely. That's super important. And we always talk about how there are two pillars to what we do, the financial side and the strategic side. And sometimes the importance of the two kind of shifts back and forth. We're financial first, but that second pillar is still always going to be the strategic side. And so we're often introducing companies before we're looking at investment, many times even when it's past our investment stage. And so the two can kind of operate independently, but also sometimes in tandem, which is the interesting part of our job as well.
Let's talk about some successes. I mean, you've had this program in place for some time. I know it takes a while to build up a startup, but are there any notable successes of companies you've identified, invested in, and whether through financial outcomes or maybe benefits to the business at large, you would deem a clear success?
Great question. I think one that immediately comes to mind is a company called Mercube that offers bespoke indices, and we've actually partnered with them to launch to support the launch of our buffered ETFs, which we call a startup within a larger enterprise. And so Mercube's been a great partner there, and Mercube is doing well and actually raising their next round right now. So I think that's a prime example of how we were able to make a portfolio investment and then actually facilitate this vendor relationship and then help support Allianz as we grow into new markets.
Another one in the portfolio too, a little bit later stage and on kind of the financial side is Vestwell. So that was one of the earlier investments in our program, and actually about a year ago became the first unicorn in the portfolio. So just kind of two sides of the strategic wins, the financial wins, and again going back to those two pillars of what we're trying to do.
Yep, that makes a lot of sense. Are there examples, and you don't have to name names, but cases where there was an investment made, or maybe even the flip side, maybe you looked at a company, they didn't look so great to you, you passed on it, and it was a missed opportunity. But wanted to just see if there are any like reflections on either failed opportunities, so missed opportunities, or opportunities you invested in that potentially didn't pan out the way you expected to.
I can think of examples of both. Certainly, I think one that we internally and on our team often talk about is one that we pass on, and it was actually before Taylor and I both joined the team, and actually the team was under different leadership at the time as well too. But there was a company, Chime Bank, which we had the program had an opportunity to invest in very early on, and ultimately passed because it wasn't as clear what the strategic fit was for Allianz. And the running joke is now is that the investment returns would have been strategic enough. So that's one that we joke about that we did miss early on. There's other cases too, and I think there's always going to continue to be cases of companies that we saw and maybe missed because we can't invest in them all,
Mm.
unfortunately.
Taylor, do you want to chime in with any examples or lessons you've seen?
Yeah, sure. I think, yeah, Chime definitely came to mind immediately. That's kind of the anti-portfolio that is always a bummer to think about. Oh, but maybe thinking about, just partnerships. I think, for us, I feel like, quote unquote failures is less of the dramatic fallout and more just like not reaching the potential that we had hoped. And I think, reflecting back on various partnerships, I think one key learning is really just to get the leadership buy-in early and make sure you have the decision makers in the room to really act as champions so that when you're having those conversations, you have the right person to move it along, because things can stagnate, or just be delayed, if you don't have the right internal stakeholders who are supporting the company.
Would you look at startups to invest in? What dimensions do you evaluate those startups? Because in early stage investing, as everyone speaks about, is ridiculously hard, right? You don't have a lot of conventional numbers that you would if you're investing in later stage companies, or certainly if you're investing in public companies. Early stage investing, there's some more qualitative elements. So I'm curious, what do you look for that register as really important criteria to consider as you're looking at earlier stage opportunities where you might not have the traditional metrics to go back up the investment decision?
Sure. Yeah. Taylor, I think you take a stab at it. Taylor's actually working right now on a investment scorecard framework for us, which is not by any means to automate our how we're evaluating companies, but to bring some like rigor and systemization or make it more systematic to how we're looking at companies and all those metrics.
Thanks, Colin. Yeah, I have a few things that I've, kind of been gleaning from across the venture landscape. I think just quick tangent, I think it's really like empowering that all these different investors and founders can come from a different background, but reach success in their own way. And I think that's partly because of your non-consensus view to something or just your alternative perspective. So one thing is certainly asking like, how are you different from the status quo? What do you see that others haven't? And I think in that case, if they have a really compelling answer to that, market fit will follow, right? Another thing that I think about is the founder, probably the number one thing that I think about. I think it was Ron Conway who outlined these points, but the founder needs to be just absolutely obsessed. Your quote unquote founder mode. You have to have that drive when you're building something. Being very product focused is another trait that I identified as well. Just really obsessed with the product specifically and the service and how they can make that better. And then the third piece is having a very, very clear vision, almost like they've seen into the future. They know exactly what outcome and they're so driven by this purpose that they're going to make it happen. And so I think those are all part of the founder. And then last thing I think, which is especially pertinent for corporate venture arms, is just the compatibility to partner. Right. Like we want to make sure that this is very much a reciprocal relationship where we have something to bring to the table as well. So looking at, product readiness, where the startup is at in their roadmap and also from our standpoint, do we have the right resources and time and does it align with our business priorities? And, that partnership doesn't need to be immediate, but we want to make sure that in the future and that generally we might align. So again, we can help augment their growth. So those are some things that I think about when evaluating a startup.
Oh, that's actually a remarkable articulation of what matters, I think, and it makes sense you're working on a scorecard because, yeah, I mean, I think you articulate so many different dimensions and like what in those dimensions matter to make it to add a little bit more rigor to the process, right? Because sometimes it's like, yeah, I have a gut feeling like this is right, but then when you distill it, there are kind of nuanced dimensions that make up that decision.
Yeah, well, I certainly can't take credit. It's definitely conversations and interviews just across the board and an obscene amount of podcast listening too, for sure.
Sure. Yeah, that makes sense. And maybe for you, Colin, as you look at companies that you invest in and try to provide support on, of course, there's the partnership play with the enterprise as a whole. But do you typically try to weigh in on the product or the go to market or hiring? And the reason why I ask is I'm just wondering what your views are around this platform approach that a lot of VC the investors have, right? They think that and they believe that they could be supportive by providing all of the operational support. How much does that truly matter? Do you provide any of that? Or do you rather leave it to other VCs to provide or the company to figure out?
Yeah, I think it honestly depends on the company and the nature of their business, and also whether or not they want it and they're looking for it from us specifically. We don't have a platform team, so the kind of the product, the marketing, the growth experts are, it's us, our team, and I even hesitate to call us the experts in all of those areas. Not having that formal platform team, we generally take kind of a backseat in regards to providing advice on the product itself and marketing and operations and finance as well. But I would say the exception is when it's a product that the key, like your ideal customer persona is us or it is Allianz. And in that case, I think we will provide more feedback on the product and the roadmap. But generally, it's whether or not the company wants it. And since we're not taking a lead position in any financing rounds, too, it's natural for us to take a little bit more of a backseat.
That makes a lot of sense. And it's interesting because as a founder, it really depends on what your DNA is, what the company's DNA is. Some founders of startups want a lot of support. Maybe they want a more active investor. Maybe they want like more of like a co-pilot to work with. Others are like, just please like be supportive in investments and maybe introductions, but it like as respectfully like get out of the way as much as possible. And I don't think there's a right or wrong answer. It depends on what the DNA of the founder is and the team is, and then what the investor is like really good at and providing, right? But I think that's a lot of the basically the triangulation that you need to do as you're trying to figure out what the right cap table is at the various junctures of your company as well.
Totally. And I guess to add on that too, like there are cases where we are getting very hands-on and very in the weeds. And there's companies that we're working with inside our portfolio and outside our portfolio as well, where, they want us to be a design partner because the product that they're building is actually built for a company like Allianz. And so we'll roll up our sleeves, we'll bring in the right people from our organization as well. And yeah, it's a great point though on, in evaluating who to take capital from, like you got to know what you're getting from them and what they can bring to the table.
All right, maybe let's turn our attention to generative AI, and I know that's like a loaded term because we've already seen so many like innings of what that means, right? So chatbots, co-pilots, assistants of all forms, and then it's all AI agents, agentic AI, and that space is still evolving. I think you could view it as the infrastructure layer, so investing in hardware and GPUs and such. There's the foundation model layer, which is obviously kind of getting shook up with DeepSeek and such. There's tooling and all sorts of AI agent frameworks and vector databases and such. There's tons there. And then there's the application layer, which is basically rolling up a lot of the core underlying building blocks and making it more accessible as technology to larger enterprises. And even there, I think you have horizontal players that are tackling more horizontal use cases like customer support or like personalized email automation or outbound sequences. And then you have more vertical specific automation. So maybe they're doing claims processing. And yeah, I think it's very interesting to hear, and I'm curious about this from your perspective, which of those layers are most compelling that an investor like yourself would lean into. And yeah, just wanted to get a pulse check on how you evaluate generative AI opportunities because it used to be a year ago, maybe 18 months ago, anything that had Gen AI associated with it was like, let's go, let's get some dollars in play. Let's just kind of basically have opportunities in the mix. Now I think there's a lot more discretion, or not discretion, there's just a lot of more diligence that's being applied to go and figure out what truly makes sense in the long.
Great question, and a difficult question too, because we don't know how the technology might evolve and which players are going to come in. But I think for us, we focus a lot on the application layer. I think that's where a lot of the value is going to accrue. And I think, as you've been seeing with DeepSeek, that AI and computers just becoming more and more democratized, which I think is just empowering more and more individuals to build tools and solutions for their specific area. I personally, I think that there will be a lot of verticalized opportunities where you have a subject matter expert who comes from, maybe just an esoteric niche field and then builds an AI tool that's just excellent for that and proficient for that area. But, I think there's also opportunities for horizontal plays as well, where there's a benefit to have maybe an enterprise wide solution that's then more customizable and modular in terms of its applications across the organization, because we definitely don't want to get in a situation. I think for us, it's the swivel chair experience for financial advisors is very pertinent for us when we're thinking about solutions. And I think right now there's a plethora of different solutions in their tech stack, and it actually just reduces time and inefficiency and creates inefficiencies and gaps. And so, on that hand, we're thinking about ways to centralize their workflow. So I think, in short, I think a lot of value will accrue in the application layer. But I think it will probably mostly be in verticalized solutions. But there will be certain plays where for particular industries, it's valuable to have something that's horizontal and then with the flexibility after that to be modular.
Yeah, I think I largely agree with that. We've certainly spent a lot of time around the application layer, lots around the vertical application layer. More and more, we're spending time on kind of horizontal AI applications, specifically around enterprise automation, and obviously a space that you're very familiar with. And that's why we are excited about multimodal as well. I don't know if I have too much more to add based on what Taylor mentioned. I think the barrier to launching a startup that's leveraging Gen AI has absolutely cratered. There's almost no barrier at all, especially when you look at what's going on with DeepSeek and open source models and the rate at which LLMs are improving and the capabilities of all of these models are improving. It's actually a really exciting time to be investing in startups because now if you have the idea, if you have the creativity, I mean, you can get to value very, very quickly. And we're seeing some really exciting solutions across insurance, wealth management, and enterprise operations. And yeah, there's certainly a lot going on though. The list of companies to follow up on, the list of areas to look at, the list of, model advancements, it grows faster than I think our team can keep up with at times. So it's quite busy right now, but it's fun.
Yeah, no, I think it's a fascinating view. I think the two of you have similar views, which makes sense, being on the same team. But I think, yeah, vertical AI is like a really hot space because if you could build that well, it becomes sticky in a way that I think some of the other like approaches to Gen AI, it's hard to kind of figure out who the category leader will be because they can kind of easily flip. And I think it is a very much like who has the largest war chest and maybe even the largest existing distribution that they could go and tackle. And so it might be like a Microsoft or a Salesforce that wins some of the more, let's say, horizontal applications, but vertical specific applications that they have. There's something that's like very unique and hard about insurance that unless you go and tailor it to insurance, you won't be able to tackle, right? And so it kind of makes it hard for very large incumbents to go and take advantage of. But for a startup, you can go and really build something incredible. But then it comes down to product velocity. How quickly are you in terms of adapting new things that are coming online? And then how great is your go to market motion? Because it's not just about winning or getting in, but how do you make yourself a very sticky component of basically a team's workflow or process, right? And ideally, larger organizations that you're then using to support multiple areas or multiple geos within the business. So it'll be interesting to see how that plays out. I think what's been surprising to me, and I'm curious what both of you think, is on the consumer side. I think you've seen some killer successes like a Perplexity or ChatGPT. In enterprise, you're starting to see some of that, but it's not like you in 2 years in that you see like a breakout success. I mean, you hear like Glean, of course, in enterprise search, maybe a Harvey in legal, but the number of like truly breakout stories there still yet to be seen, which indicates that there's still so much to be built and there's so much still to do. It's not like the space is settled by any means.
Totally. And I think part of that too is, well, I think there's a lot of reasons. I think, especially when I look at insurance companies are a little bit conservative and, maybe not going to be the first to adopt some of the latest and greatest technology. So there's some level of that at play. But I think also where where things are at right now, that seems like one of the biggest barriers to kind of releasing AI within the enterprise is the ability to connect to all of your organization's disparate systems and data sources. And that's a compliance issue, in some cases, a security issue, and also just like an operational and technology issue is, you know, in many cases, the models and the technology is there, but it's only as good as the data and your own knowledge and systems that you can provide it access to. And that, at least from I think our perspective, seems to be something that hasn't been figured out by the chat GPT of the enterprise that's going to come in the future.
Yeah, it's interesting to see that the plumbing needs to be there, right? And if the plumbing and piping and all that's not there, doesn't matter how great the technology is. But then there's the compliance and regulatory aspect of it, which is you can't just create random pipes to random parts of the business. Everything needs to be done intentionally, so you're not running afoul of like too much access or too much like overly permissioned AI, things like that. But Taylor, you wanted to add something. It seems like.
Yeah, I was just gonna say at another point too, I feel like there's such a plethora of opportunities. It's almost like which one do we choose, and is this the right one, and is this the one that we want to dedicate resources to and put our brand behind and roll out to customers. So I think whereas with OpenAI and Perplexity, it's a few. There's only a few like options, but I think in certain application layer solutions tailored for the enterprise the solutions are just constantly evolving and there's new startups emerging. And so then we're constantly asking ourselves, is this the one we want to proceed with? And so I think it's difficult to really dig into one when you're also trying to make sure you're not missing out on another as well.
How do you think about the need or desire for enterprise to go and work directly with Gen AI with the lowest level building blocks? So, for example, going to the hyperscaler of choice, using foundation models directly, building with maybe libraries and frameworks, many of which might be open source, and really, in some ways, building a homegrown application layer for whatever the need of, let's say, Allianz Life is. in the different areas, doing it homegrown versus going with a vendor, and that vendor could be a startup that you're bringing in, maybe that you've invested in, or it may be like an incumbent software vendor that wants to go and sell some new Gen AI capability as part of their software offering. How do you help navigate those conversations with the business as you're evaluating startups that might be going through that same calculation with the business side?
Yeah, it is a good question. This kind of the conversation of build, buy, partner. Like where do you build it in house? Where do you buy it? Where do you partner? And speaking from our experience at Allianz, it's where do we have existing capabilities, and also where do we have secret sauce that we want to protect or that we're never going to just if we have proprietary data that we're never just going to plug into a cloud-based application, that may influence it as well. I think we're in a unique spot where, at we sit on the corporate venture fund, so we're looking at startups, working with startups all the time, and we get this kind of external view. And it's at least my personal opinion that in most cases we're better off actually partnering or buying and working with external innovators, because there is so much capital and resources and talent that's being thrown at problems and AI technology companies in general. And to think that we could build it internally better than some of the smartest people in the world working with large amounts of venture capital dollars, I think would be silly. So I'm of the opinion that in most cases, it again depends, but in most cases we're actually better off on the buyer partner side of things. Taylor, what are your views there though?
Yeah, no, I 100% agree. I think it's exactly that. It's we build internally when we have a secret sauce or, we are in a regulated industry. So to the extent, there's regulation factors or there's, end consumer data that we want to really protect, that is where we're going to build in-house. But then when it comes to other solutions where the talent is just remarkable, it'd be silly to try to build something in-house. And we want to also grow with the times as well and make sure that we're keeping up with innovation, of course, too. I think to not partner, especially in this day and age, like you would certainly be at risk of falling behind. So it's something that we're constantly thinking about.
It is interesting though, because it takes time to come to that conclusion. It makes sense why you've both concluded that way, but it takes time to come to that conclusion. I think that's what makes the sales cycles insanely long. It's also hard, I think, having come from engineering myself. Generative AI is one of the hottest things that IT and engineering could work on. To say that you're going to take away something that they would prefer building and doing in house because it's so fun, frankly, to work with, it's a hard sale. It's a hard sale to make initially. So they have to kind of go through the motions, figure out what they want to really and take on internally versus figure out external partners to work with. But that's exactly what's happening, and it will be really exciting to see sort of how that plays out, over the next couple of years. But this has been a phenomenal conversation. Thanks for joining the podcast. For our audience that may want to reach out and get to know more, Taylor, Colin, where could they reach out and speak with both of you?
Yeah. Great question. So we do have a website, Allianz Life Ventures website, and our contact information is on there as well as our LinkedIn's. But I think both Colin and I are on LinkedIn as well. Colin, do you have any other plugs too?
No, those are great places to start. Also, first name dot last name at allianzlife.com. We're always open to inbound from startups, and getting to talk to exciting founders is one of the most fun parts of the job. So please reach out if you're interested in learning more about what we do.
Yeah, absolutely.
Amazing. So we'll include that in the show notes. And thanks for being part of the program. Really appreciate the conversation.
Yeah. Thanks,
Awesome.
Ankur.
Thanks, Ankur. Catch you next time. Cheers.
All right. See ya.